I'm 100% enormously optimistic about the future of this country over time. I mean, there's no way you can bet against America.
The topic which we are going to discuss today is about the large cash holding Berkshire Hathaway, the one owned by Warren Buffett, is holding these days. So our discussion will be concentrated on why Berkshire Hathaway, which is a large conglomerate who invests in various stocks and equity instruments and even bonds, why they are sitting on this large capital. You should note that S&P 500 or US equity market and their indices are sitting at their all-time high levels. So the market is at all-time high levels and Berkshire Hathaway is selling and sitting on large cash pile. So let's deep dive into it. Whatever media is telling you is what the so-called controller of the economy wants you to know. But as always in our channel, we decode it and directly declutters all the hypes and secrets and get it right to you. So let's deep dive into it. As I speak, Berkshire Hathaway is having a $397 billion, which is around $400 billion of cash pile in their books. So the cash pile is as in the majority of the amount is invested in treasury bills of US. So treasury bills I have already mentioned in my earlier video, it's just like bonds. So these are long-term bonds which are having some coupon, minimum coupon interest rates which will be given to them. So the cash is not as such cash, but they are invested in places like bonds wherein they get minimum yield, and as soon as it finds an investment opportunity, these bonds can be easily liquidated and it can be put into the investments wherever they want to put, and this can be diverted into the investments they want to put immediately. So this whole $397 billion is all sitting on sidelines, never invested in any of the equity instruments, any of the stocks. So Berkshire Hathaway, in that case, Warren Buffett, Greg Abel, everybody has been telling that the best way of investing, if you are not an active investor, is always to invest in S&P 500, the index of US.
I think it's the same thing that makes most sense practically all of the time, and that is to consistently buy an S&P 500 low-cost index fund. Keep buying it through thick and thin, and especially through thin, because the temptation gets, when you see bad headlines in newspapers, maybe to say, well, maybe I should skip a year or something. Just keep buying it. American business is going to do fine over time. So you know the investment universe is going to do very well. The Dow Jones Industrial Average went from 66 to 11,497 in one century, and then since that century has ended, it's more or less doubled again. American business is going to do well. The trick is not to pick the right company; it's to be, because most people aren't equipped to do that, and plenty of times I make mistakes on that. The trick is to essentially buy all the big companies through the S&P 500, and to do it consistently, and to do it in a very, very low-cost way, because costs really matter in investments.
So we always believe in US growth story. This is what they say, and you invest there. It's a no-brainer that US will keep on growing, and you will always make money. The word which they always tell is that never bet against US.
We have a long way to go, but I'll repeat, if you move to the next slide, that never bet against America.
So let's try to decode whether that is correct or what is the facts behind that. Since October 2022 until end of 2025, Berkshire has sold more than $183 billion net, means they have purchased some and they have sold some. So the net purchase and selling is having a negative $183 billion. So they have net sold $183 billion. Like we always say, FII buy, FII sell. So the net sell buy is always indicated on a daily basis. So what I am telling is that since October 22 to 2025 end, last year end, till then they have sold $183 billion net. And out of the equity being sold, the stocks being sold by Berkshire Hathaway, they have sold almost 75% of Apple's stake which they were holding earlier. So they have 100% holding. Out of that, Only 25% remains with them, and the rest 75% is completely sold out. The so-called iPhone, the iPhone company, Apple, they have sold major stake in Bank of America as well, which again was their major holding. Now getting into the S&P 500, the index. So they tell that you have to be completely invested in index, so you will definitely make money because US keeps growing. That's what they used to claim. But then they have been net sellers in S&P 500 index funds. So whatever index funds Berkshire Hathaway has been holding, they have sold that also. So they have been net sellers for the past 12 consecutive quarters. Sell, sell, sell. That's what they have been doing since the last 12 quarters. So if you see at the end of 2023, they were at merely some $180 billion cash pile, the Berkshire Hathaway. And if I talk now, they have almost hit $400 billion, which is more than 2.5 times surge in their cash pile. So how this cash has been coming? It is through pure selling of their positions, especially in equity stocks. If you see in early 2000s, Warren Buffett had come up with an article in the Fortune magazine, wherein he had mentioned something about the total market capitalization of all the stocks listed in US market divided by the GDP, the gross domestic product of the country. So what the country is producing, productivity, depicting the productivity of the country, that is GDP, and the total market capitalization, all the stocks, the share price into number of shares gives you the market capitalization. So that's the total market capitalization of the stock market. So that divided by the GDP of the country was something which he was mentioning, and this is later mentioned as the Buffett indicator. So the Buffett indicator used to tell that if that value goes beyond 200%, we are on fire. Like it should be damn cautious. Not even risk, it is much beyond risk. But can you imagine or can you guess what is the percentage, like the total market capitalization to the GDP as we speak for US? Can you tell what is that? Yes, that percentage is now 230%, which is almost 15% higher than what Buffett has indicated that it's a dangerous situation, which is 200%. So it is 230%. So can you imagine? So this indicates that the stock market is highly overvalued. All the stocks has reached its highest stretch of valuations. Crazy valuations, you can say. But then you will be saying that Warren Buffett or even the CEO Greg Abel has been coming and telling that, the CEO of Berkshire, Greg Abel, has been coming and telling in the media that the selling or the cash pile or the cash position they have come up currently is because there has been a strategic leadership change. Like Warren Buffett used to lead the Berkshire Hathaway, now Greg Abel has taken over and he is leading the organization. So there has been slight change in the investing themes and some portfolio shuffling. So though the theme of value investing still remains with Greg Abel as well, because he is a devotee of Warren Buffett, groomed by Warren Buffett only, but then there has been a small portfolio shuffle. They had to sell. Because of that, the selling has happened and the cash pile has happened, is what they have been always telling in the media. But then let's get into that as well. The timelines, let's see. If you see, this explanation has been too convenient because the timelines never match. Berkshire Hathaway had started its sustained selling in late 2022. Remember, late 2022. But Greg Abel was named as the successor in May 2021. So there is a gap between these two events. Almost 18 months earlier, since Berkshire Hathaway started selling, Greg Abel had been appointed or been declared as the successor for Warren Buffett in Berkshire Hathaway. So if the strategic leadership change was the reason for portfolio shuffle or selling the stocks, including that of Apple and Bank of America, which Warren Buffett has been holding for long. So this is not correct, because 18 months gap, why didn't they start selling from that time when Greg Abel was declared as the successor for Warren Buffett. They didn't do that. When did they start selling? That's another interesting fact. Once the Buffett indicator, the total market capitalization of US stocks versus the GDP started touching 200 or even exceeded that. As we speak, it is 230% as I mentioned earlier. So at that point, they have aggressively started selling, including that of Apple shares. If you see, they are strong believer in the businesses, even though Warren used to tell that I have recently or lately understood about the potential of digital stocks like Apple. But then he had found great potential, and that is why he had invested large chunks of cash from Berkshire Hathaway into Apple. But then they have sold, means it is not that they don't believe in the business, but he always say price is what you pay and value is what you get. So the price which the Apple is currently quoting, which is multiple times valuation and so stressed, so such high crazy 30 PE levels and all, is not digestible for a value investor like Warren Buffett or, well, in that case, Berkshire Hathaway. So the price the tickers, the stocks are quoting is much higher compared to the business value or moat it is offering. So valuations are stressed, so they are pushed to sell the stock even if the business is good. So 12 consecutive quarters of selling, $183 billion net sell, sitting on 397, almost $400 billion cash pile. Buffett indicator much above 200%, which is 230% and still growing. High levels of US debt, $39 trillion debt, again a red flag. Continuously selling S&P 500 index fund, and as the P of S&P 500 index has touched 28, which is so high compared to its normal average value of just 17 versus 28. Just imagine how large is, almost double. The Apple stake sale, the large 75% stake sale of Apple by Warren Buffett. So all these factors are big red flag and showing Warren Buffett's lack of confidence in the US economy, the US stocks. Yes, he has always been administering that never bet against US, because he is a true patriot and also a seasoned investor. If you ask me, we all follow Warren Buffett, core Warren Buffett followers. My channel itself is dedicated by the value investing principles he has been following. So nothing against him, but then the takeaway is that, see, he is a pure investor and he also loves his country. So he cannot come out and tell that I don't anymore believe in US growth story and US is going to have a meltdown because it's growing debt and is losing strategies even in war, and also the poor economic management and losing US dollar relevance, and BRICS nations getting together and bringing in new currencies, and US dollar losing its shine, because these days the talks regarding decommissioning the petrodollar deal also is been spoken of. So all these things is never good for America. And then as a value investor, as a core seasoned tempered investor, a investor with integrity and great temperament and intelligence, you should always follow those people because they know much beyond what we normal investors know. So without complaining about them, learn from them, analyze them, the good points which they are holding and they are executing in their investing philosophies. That's what we are also doing in our channel. So going forward, I will keep you updated on his strategy, Warren Buffett's strategy, and even Berkshire Hathaway's strategy. Warren Buffett is a very old guy now, but still he is a sharp investor with lot of patience. So if you also hold the stocks for a very long time, then whatever recession or any economic downturn which you are getting and which is impacting your portfolio will be mitigated. That is for sure, because stock market is bound to go up. But then if you are getting a great drawdown, a great fall, so as I always say, you should have enough money, just like big investors like Warren Buffett or Berkshire Hathaway. Like you should have money parked in bonds, overnight funds, liquid funds, short-term bonds, or maybe easily liquidatable money parking zones wherein you can easily liquidate it and then if you get a recession tomorrow, then your money should be able to be deployed in those favorite stocks or undervalued stocks available at great discounts. But then if you miss that opportunity, then you will have to repent the lost opportunity. So Warren Buffett always becomes greedy when others are fearful. If others are selling, he buys. So that's how he gets stocks at cheap valuations and make multi-bagger returns. In next video, I am coming up with another interesting topic of where the money goes in recession. So you are telling that in recession, money is going, everybody is going down, the economy is going down, then still where the money is going, who is making money in that, and who are those smart investors and how investors make money while recession. This is one interesting topic which I am going to discuss in the next upcoming video. So in this video, the takeaway is that stay in at least 15 to 20% cash, as the media and other influencers are successful in telling you that the economy is good and you should keep investing and putting all the money into the equity and other investing instruments. So this is not the case. There is a huge wind coming in. So for that you should be ready. I'm not telling you to sell all the stocks. This is the reality that you should have enough gunpowder to invest in opportunities which is coming to you by chance. So this is some rare opportunities you will get and you should not miss that opportunity. You can stagger your investments, keep investing in undervalued stocks, even if in Indian markets as the Nifty is going towards, the index is going towards all-time high levels, there are n number of stocks which are still available at 5-year low or even 10-year low levels. So you should find that if there is quality in that business and if the business owners are good and if there is unique moat in that, if their cash flow is good, going forward the projections are good, then you definitely should put those stocks in the watch list and understand their business model and then try to invest in them once you get an correct opportunity, like cases which can happen in case of recession or economic downturns. So see you in next video. Any comments in this, any doubts on this, any difference in opinion also on this, you please comment in the comment box. I will value it and reply to each one of them. See you in next video. Till then, happy investing.